salutations, all. This is Jay Snead, aka the Stock Market Professor. Every single retail investor on YouTube right now is asking the exact same question. Is NVIDIA a bubble? And did I miss the boat? Wall Street says yes. The analysts say the party ends in 2027. But today we are pulling back the curtain on the massive structural blind spots the mainstream media is completely missing. And if you're in my group, welcome back, Wealth Builders. I'm your stock market professor. Today, we are going to deep dive into an exclusive investor diagnostic to look beyond the consensus. And if you want to invest like the top 1%, grab a pen and let's dive in. So look at your screen right now. This is the great divergence. It's the massive gap between what Wall Street thinks is happening or what Wall Street wants you to think is happening and what Silicon Valley is actually building. The Wall Street consensus is predicting a 2027 flatline, which is why NVIDIA does not move. They assume NVIDIA just sells individual GPU chips to data centers and that we are heading straight into a hardware glut. But Silicon Valley reality is entirely different. Tech leaders aren't just buying chips anymore. They are partnering with NVIDIA to build complete monolithic AI factories. And we are talking about jaw-dropping infrastructure projects like the $100 billion OpenAI partnership. What we are witnessing is the total conversion of all general purpose computing into accelerated AI compute. The old CPU world is dying and the GPU accelerated world is taking over. Now, you might say, Professor, if things are so great, why did the stock take a breather recently? Well, let's break down the anatomy of a muted market reaction. First, we hit the $5 trillion ceiling. At $5 trillion valuation, investors demand flawless, shockingly high future guidance. Perfect becomes the baseline. Second, we are seeing severe beat and raise fatigue. NVIDIA just shattered expectations with 85% revenue growth, and Wall Street shrugged it off like it was a boring Tuesday. We've seen this movie before for the last, 8 quarters. Add in pre-programmed sell the news profit taking by short-term traders, the stock will consolidate. But as the saying goes, it's like a bunch of critics denouncing a beauty queen. Regardless of what they say, the woman is still a beauty queen. So don't confuse short-term trading noise with long-term fundamental value. If you want proof of that value, let's step into the engine room and look at Q1 2027 financial architecture. These numbers are absolutely historic. So NVIDIA's total revenue growth grew at 85%, completely shattering the Wall Street consensus of 79%. Data revenue alone skyrocketed $75.2 billion, marking a 92% year-over-year explosion. But here is the metric that should make every value investor salivate. $49 billion in free cash flow generated in a single quarter. That is an 86% increase in one quarter, in 90 days. NVIDIA is printing so much cash that they just expanded their share buyback authorization by another $80 billion to reward long-term shareholders. So this is not a speculative tech bubble. This is the most profitable financial engine in human history. With all of those numbers, historic numbers, why is Wall Street modeling a plateau? Because analysts are mathematically blind to 3 specific structural catalysts. And I'm going to point them out because I want the average investor to know exactly what's going on. They are completely missing, number 1, the standalone CPU and AI agent market. Number 2, physical AI and autonomous fleets. Number 3, the 2027 hardware echo wave. I'm going to just depart for a second and just Jensen Huang, the CEO, is a genius. He has mentioned this multiple times, which Wall Street ignores, which is why I created this video, because somebody has to stop the madness. So let's dissect exactly how these three pillars will break the Wall Street model wide open. So catalyst number one is the AI agent economy. Up until now, NVIDIA has owned the brain, the massive GPUs used to train AI models. But we are moving from thinking AI to acting AI. Enter AI agents. These are software entities that can sort your emails, book your travel, execute actions, and run businesses on your behalf. To run these millions of autonomous agents, you need the hands, which is the CPU. So you have the GPU, and now you have the hands, the CPU. Through their Grace Blackwell and Vera Rubin superchips, NVIDIA is breaking out CPUs into standalone servers specifically to power this execution market. This opens up an immediate $20 billion revenue path this year alone, tapping into a massive $200 billion total addressable market that analysts have practically valued at zero, except when it comes to AMD. Catalyst number two is physical AI. This is where AI leaves the digital screen and enters the physical world through robotics and autonomous vehicles. Training an autonomous car requires an exponential amount of data center capacity to process real-time feeds from cameras, LiDARs, and vehicle sensors. Look at Tesla's Cortex facility. Their AI training cluster scaled to roughly 150,000 GPU equivalents by March 2026, and they plan to double it shortly. More importantly, Tesla has pivoted away from its internal Dojo chip program to double down on NVIDIA's advanced AI 5 and AI 6 architecture. So physical AI shares the exact same exponential growth factors that drove LLMs and acting as a secondary massive tailwind for NVIDIA's hardware. I don't want to get too technical, so just look at the exact opportunity. The same growth that happened with the rise of ChatGPT is going to happen with the physical AI. But here is the ultimate macroeconomic card that Wall Street completely misunderstands. The 2027 replacement supercycle, or what I call the echo wave. So let's look at this timeline. OpenAI launched ChatGPT in November 2022, kicking off the initial global infrastructure race. Tech giants like Meta bought tens of billions of dollars worth of chips. Now apply the 5.5-year rule. Mega cap tech companies depreciate server hardware over roughly 5.5 years. By mid 2027, that massive initial cohort of GPUs will hit full depreciation. They become technically obsolete and too expensive to power compared to newer cost saving architectures. So, right when Wall Street claims demand will flatline, a mandatory massive wave of replacement demand will slam into the market. That is the echo wave. I'm giving you that tidbit of information for the low price of free so that you don't make a mistake with NVIDIA. Now, as a wealth builder, you must never be blindly bullish. You have to manage risk. So let's look around the corners to see what could happen. So the single greatest threat to NVIDIA's historic valuation is its relationship with Taiwan Semiconductor, or TSM. Right now, NVIDIA enjoys a software-like gross margin of 75% because they design the chips. But they outsource actual manufacturing to TSM, whose margins sit in the mid-50s. As megatech giants like Apple, Amazon, and Tesla aggressively bid for TSM's limited advanced manufacturing capacity, TSM's negotiating leverage TSM's negotiating leverage skyrockets. which is probably another video. The primary threat to NVIDIA is TSM, demanding a larger slice of the AI profit pie, which would instantly compress NVIDIA's historic gross margins. We must track this relationship closely, or if you follow my page, I will do it for you. To protect and grow your capital, here is your Wealth Builders Playbook with the top 3 trajectories to watch. First, let's monitor the margin metric. So let's watch NVIDIA's gross margins. If it dips below 70%, that margin compression is your earliest leading indicator of a cycle top. Second, let's track the agent adoption rate. So watch their standalone CPU revenue. We want to see progress toward that $20 billion standalone CPU target to prove they are capturing the AI agent execution market, not just the GPUs. So third, let's check out a replacement reality check. Ignore the 2027 flatline and the financial media noise. Listen closely to megacap earnings calls for tech giants explicitly mentioning infrastructure upgrades. That confirms that the hardware echo wave is playing out exactly as planned. With that said, the mainstream consensus is looking backwards at a hardware cycle, while tech pioneers are building an entirely new computing paradigm. By understanding these hidden S-curves, you position your portfolio ahead of the curve. If you want the full institutional PDF slide deck that you just saw of this diagnostic to read through yourself, I left a link to download it completely free in the description below. But if you're ready to stop guessing on individual tech stocks and you want to build multi-generational wealth alongside an elite network of dedicated investors, then please join our private Wealth Builders Mastermind group. Click the first link in the description below and let's architect your portfolio together. Our school group is amazing. Don't forget to hit the subscribe for more institutional deep dives from your stock market professor. So stay sharp, stay disciplined, and I hope to see you inside the Wealth Builders Mastermind group. Peace and blessings. I'm out.